Guys, what we're going to show you today is just simply unsustainable. Let's dive in.
Trade genius.
Well, Bob, when I see these charts, I start to wonder, why do we even pay taxes?
Yeah, and look, it's a joke because the government's borrowing what they can't tax. And the reason why they tax you is because it's control. So they could have always done this environment. So I know the point you're making. But let's throw this first chart out here. This is the interest expense on the US debt monthly. It is now starting to accelerate. The next chart I'm going to show you, there's a French mathematician called Sornet, and he came out with a wave called the Sornet wave. And let's show this chart because this really tells the story. Okay, whenever we see this in the stock market of its stock price, you start looking for the price to crash. But in this situation, we have a geometric problem with interest rates that are basically heading towards infinity. And the only way this thing breaks is if the Federal Reserve starts to basically go negative on interest rates, or we start paying back our bills. And I think, I always talk about you can't get to the zero bound, so we have a few choices, right? You could tax people. Well, you could tax people at 100% of everything, and you buy yourself a year, right? And then the government goes right back into its problem again. And then everybody's broke, so you have no economic activity. Or you can basically stop the madness and go to 0% interest on the debt, and then also balance your budget. That would probably drop GDP 50%. No politician's going to vote for that. The third way out is to them to go negative on interest rates and have financial repression. And they say that can't happen as a reserve currency, but I think they're going to probably try to figure a way to do it, Phil, because this is absolutely unsustainable. I mean, in the next 2 years, interest expense will exceed the entire federal budget. We've taken this thing to that inflection point, whatever it is, remember when everything converges together? That's where we are.
Yeah, it's interesting too, because if you think about interest payments and the 1% or the 0.5% in the country, those guys are making out like a bandit. So it's also creating a wealth division, or it's contributing to a greater wealth division, because if people, the working class doesn't, we've shown how the savings are obliterated. So high interest rates are also a problem in that respect as well. So working class can't take advantage of the higher interest rates. If anything, it hurts them because they're looking to buy a home, for example, especially if you're in the younger generations, and that's being problematic because you're not used to that. And you also have home prices that are way high. And if for those of you that service the ultra wealthy, whether it's construction or services and things like that, when right now everybody's riding high on the hog because they're just parking millions and millions of dollars and getting really good returns. But that's going to go away, because I really don't think they're going to be able to sustain rates anywhere near these levels, and we're probably going to round trip a lot of that rate hike that we saw. I think the Fed was trying to give themselves some runway to be able to ease over the next, however many quarters. They bought themselves some time, especially if they're going to be doing, quarter 25 basis point cuts. Right? We can be cutting rates for many, many months, and they can throw in a few 50 basis points or 75 basis point cuts if absolutely necessary. I suspect you'll see that as well. But the point I'm trying to make is that, the interest payments these guys are going to be making is also going to decline. So you're going to see even that upper crust of the income spectrum is going to start pulling back, and they will pull back because these guys, it's all about cash flow. And if things aren't flowing, they're not going to spend. If anything, they're more shrewd about that stuff. That's how they got their money. So don't think that that's they're insulated. This is going to affect everybody.
Everybody, is Bob, a Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it, and we'd like to see you in the room. Thanks for listening. Hey, look, Phil, we're probably on the other side of that wealth divide to the plus side, and look how we're living our lives, right? I dropped a whole car right? I'm in no rush to get a new one. You're saving like a squirrel waiting for the great winter to come. So, and we're not alone. Rich people are rich for a reason, and it's not all because of bad reasons, because they have an ability and discipline and foresight. And it's really the middle class and the poor that have no choice. So it's not derogatory. Look, I grew up poor. So I understand you have to spend to live, but the rich don't have to spend. I always say money going to the wealthy is dead money for velocity of the economy, because at some point you don't need anything else. Right. And you're not going to buy, especially if you're worried. People know when you go into recession, you have a bullseye on your back. So those guys, the smart ones, tend to pretend they're not rich. And so you won't see the flash. And you're already starting to see that too. Luxury item sales are falling. People aren't showing off anymore. So I just think we're going to have a change in direction here. And I agree with you. They're not going to be able to bring this thing down like they brought it up, Phil. I suspect, I think you said it on a podcast a couple weeks ago, we will see a couple emergency mid-meeting rate cuts when this thing starts to really go. And the other thing I'll leave you with, Phil, and I'll give you the last word, is that the Atlantic just did an article bitching and moaning about how the Federal Reserve is mismanaging the economy because, remember, the politicians want to control the bank. And I think we're on the last legs. It's the last days of Caligula for the reserve banks, because I think watching what's happening in Argentina is that they're going to try to get control of this organization, because the politicians aren't going to allow a private bank to control their future. And it got to a point now, I think, like in Argentina, where the power shifted enough to curtail the banks. And I think you're going to see that going around the world.
Yeah, it's going to be a doozy. And I think I'm going to have multiple things coming to a head: real estate, banking, all of this stuff. And I've been looking at a lot of different things and analysts, and now the concern is that this is going to run longer and deeper than what we saw in '08. And it's not going to be, '08 was a rather abrupt thing that came, where this is going to be more of a long slide down and a long climb out. So, and people by and large are just not anticipating that stuff. So, and then things like, to switch directions here, crypto, for example, right? You're talking about something that's highly speculative, right? So we get into that type of environment, and crypto is sensitive to liquidity, right? That's going to dry up as, a lot of that starts to migrate into bonds. You're going to see a lot of this stuff that's out there just going to zero. You really are, so if you had high hopes for a certain altcoin, if it's not doing what it needs to do in the next 3 months, I would start to think about my relationship with those holdings, because one thing's for sure, altcoins have their cycles, and a lot of those will go to very low levels, if not zero, get delisted, and they just don't make it through the next cycle, or they just don't get back to the levels that we saw when liquidity was flowing, when the Fed was printing. Those levels are not going to be seen again for a very long time, if ever. And so you have to stick with your blue chips. But everything in that space, for example, is going to get hammered. So you got to watch highly speculative sectors. If they've been having a good run, but if the utility's not there, the fundamentals aren't really there yet, and you're betting on the come on some things, then you don't want to be in those spaces. It's going to be about defensive plays and hard assets as we come out of this.
Yeah, and next week we'll start sharing with you what some of those defensive positionings are. You guys know some of them, we talked about it, but maybe we'll dedicate a show to what those are, because there are going to be opportunities here. If you did what we're going to suggest you do for the 2008 financial crisis, you actually made money from 2008 to 2009.
Yep.
And being very, very conservative. It's nothing exotic. And now there's even more tools out there. Look, the rich aren't stupid. They're creating tools for themselves right now to take money from you as this market collapses. So with that, Phil, I thank you, and you guys have a great weekend. Check us out, tradelikeagenius.com. I think we have some really good ideas for you. We're helping people make money in the markets. You can check out our track record on the front page of the website. And what we charge for the service is nothing compared to what you get out of it. Have a good one. See you later.
See you guys later.
Trade Genius.